It is 9:08 a.m. Pacific Daylight Time. It is the 22nd day of April 2025. This is episode 1079 of Bitcoin, and we're going to burn through it. I've got a call to do and some other stuff, so let's just jump right in. Peter Schiff apparently is holding a Bitcoin bond. So the hypocrisy is real. Peter Schiff's Bitcoin bond secret. The gold bug has been caught holding digital gold. According to Alan Helm from Bitcoin Magazine, Peter Schiff has built a career on deriding Bitcoin. Pausing right there to say that's not true. He did not build his career on deriding Bitcoin. Let's have a little bit of respect. All right, he may give a shit like all day long about Bitcoin and whatnot, but honestly, I think he secretly is just playing good cop, bad cop. He's not an idiot, and he built his career in gold. And we can say whatever we want to say about Peter Schiff. Have you seen his house? I mean, he's doing okay. He's not living under a bridge. All right, so just let's kind of like calm the rhetoric down on this stuff. Because I think that Peter Schiff is playing a longer game than any of us think. And no, it's not 4D chess. But the outspoken gold evangelist and fund manager has famously been scoffing since 2019 to keep dreaming Bitcoin is never going to hit $100,000. Well, to Schiff, the world's largest cryptocurrency has long been nothing but digital fool's gold, a speculative bubble destined to pop. Yet in a twist, laced with irony, recent disclosures reveal that Schiff's own asset management arm has quietly gained exposure to a Bitcoin-backed bond late last year. In other words, the man who equated Bitcoin with tulip mania now finds his firm unwittingly invested in a bond powered by the very asset he loves to hate. The instrument in question is a Bitcoin treasury bond issued by Samara Asset Group, a publicly traded European asset manager formerly known as Cryptology Asset Group, and in November of 2024, Samara successfully issued what it calls Europe's first ever Bitcoin bond, raising 20 million euros to expand its portfolio and significantly increase its Bitcoin treasury holdings. The bond is structured as a 5-year senior secured note maturing in 2029, offering a substantial just over 10% annual coupon. Additionally, the bond includes an innovative incentive. Bondholders receive an extra 0.25% premium on the principal for every 0.25 euro increase in Samara's net asset value per share, closely aligning bondholder interest with shareholders. Samara CEO Patrick Lowry describes the issuance enthusiastically, noting it was, quote, the very first time in history a European firm has taken a page out of the Michael Saylor playbook, issuing a bond explicitly with the intent to acquire Bitcoin, end quote. Indeed, within weeks of the bond's issuance, Samara utilized the proceeds to purchase approximately 76 BTC for its treasury and invested in several crypto-focused venture funds. The bond's backstory reads like pure rocket fuel for institutional Bitcoin enthusiasts, announced in October of 2024 amid rising BTC prices. The Samara Bitcoin bond was designed to leverage Bitcoin as a strategic treasury asset reserve, or reserve asset. Samara then positioned it as a win-win proposition. Investors would enjoy high yield coupled with additional NAV-based upside, while Samara could allocate capital into Bitcoin and pioneering tech investments. And by early November, the bond had successfully closed its private placement at 20 million euro, the minimum investment ticket 100,000 euro. And I don't know what that means. It's in parentheses, but I'm not a bond trader. So it is expected to be publicly listed for trading on the Oslo and Frankfurt exchanges within 1 to 2 weeks. Notably, this bond is secured by an over-collateralized portfolio comprising a 150 million euro basket of Samara's venture investments locked securely within a guarantor SPV, resulting in an ultra-low loan-to-value ratio of approximately 13.3%. Little did anyone suspect that among these bondholders would be Peter Schiff's Euro Pacific. Enter the EuroPac International Bond Fund, a global bond mutual fund managed by Euro Pacific Asset Management, the very firm founded and helmed by Peter Schiff himself. Schiff, as an owning member of the advisor, has long shaped Euro-Pacific strategy around his macro views: hard money, skepticism of the US dollar, affinity for gold, and foreign bonds. The EuroPac International Bond Fund typically holds a mix of sovereign and corporate debt from around the world, aligned with Schiff's thesis that a non-US asset can protect against dollar debasement. It's the last place one would expect to find anything related to Bitcoin, but that's exactly what turned up when the fund's SEC filings were published this year. In the fund's Form N/Port P disclosure, a mandatory SEC filing of portfolio holdings covering late 2024, a curious line item appears. Quote, Samara Asset Group PLC, end quote, identified by the very same ticker number of Samara's Bitcoin bond. The filing shows EuroPac's bond fund held 800,000 euro principal value of Samara's Bitcoin bond, valued at roughly 870,000 USD as the reporting date. That position represented about 1.58% of the fund's net assets. In plainer terms, Peter Schiff's flagship bond fund became a financer of a Bitcoin-backed enterprise, even as Schiff himself spent 2024 loudly bashing Bitcoin's rally. To be clear, this holding was likely a small, yield-driven allocation made by the fund managers. From a bond investment perspective, Samara's 10% coupon for a 5-year note may have simply looked like an attractive high-yield opportunity, and in fact, EuroPac's International Bond Fund had a mandate to seek income in international markets, and 2024's rising interest rates made double-digit coupons, well, enticing. In all likelihood, this was a strategic bet on strong yield, not an ideological about face. But, intentional or not, the irony is exquisite. Schiff's fund directly hitched itself to Bitcoin's success. If Bitcoin thrives and bolsters Samara's finances, EuroPac's bond will be safer and its interest payments more secure, and conversely, a Bitcoin crash would imperil the very issuer that EuroPac lent money to. This revelation is likely to spark both amusement and lively discussion within the Bitcoin and crypto communities. Given Schiff's well-known stance, it's easy to anticipate the inevitable jokes. Could Schiff be secretly stacking sats? Will Bitcoin and crypto Twitter soon have a field day pointing out the irony of Schiff inadvertently backing Bitcoin? For years, Schiff has lambasted Bitcoin as having no intrinsic value and repeatedly predicted its inevitable collapse. Even when Bitcoin crossed $100,000 in December, Schiff dismissed the milestone, tweeting that it only occurred due to buying off politicians and getting in bed with government, and insisted that the rally would soon end. While Schiff himself may not have directly involved or be directly involved in the decision to purchase said Samara Bitcoin bond, such allocations often reflect pragmatic yield strategies by fund managers rather than ideological shifts. The symbolic impact, however, remains significant. Bitcoin, the decentralized asset Schiff promised to never own, now quietly forms part of his firm's portfolio, underscoring how market incentives can override even deeply held beliefs. Ultimately, this exclusive discovery highlights a broader narrative. Bitcoin's gravitational pull in traditional finance has become so strong that even its most outspoken critics can find themselves indirectly aligned with its success. All right, that's pretty much there's a couple more paragraphs here, but I don't need to get into it because the most important part was that very last sentence. Bitcoin's gravitational pull in traditional finance has become so strong that even its most outspoken critics can find themselves indirectly aligned with its success. Okay, so I like the way that this story rolled out. And the reason is because at first it was lambasting Peter Schiff for essentially exercising an amount of hypocrisy that that we always hoped we'd see. However, Peter Schiff has held Bitcoin before. I mean, come on. His son held Bitcoin. It's always been a good cop, bad cop thing. I think his son finally sold out of all his Bitcoin, which is a bad move for him. But hey, do whatever. It doesn't matter. Peter Schiff has been given Bitcoin. He's held Bitcoin. He doesn't like Bitcoin. We all know this. However, even his own fund manager was looking at something and said, "Oh, shit, bro. Look at that yield. Look at that yield. We got to dive in." And maybe they didn't even really know. Honestly, at this point, it is a casino the likes of which it's like a drunk person walking through the floor of, Caesar's palace, just finding some new game to play, but doesn't even really understand the rules of the game. You see what I'm saying there? So even though we can laugh and point our fingers at Peter Schiff for being a hypocrite or pointing out the irony of the entire situation, it really is more likely that they just accidentally stepped into this thing. And here's what I expect to have happen. People are going to lambaste Peter Schiff for this so hard, he's going to call his bond managers on the phone and he's going to say 2 words: sell it. I can almost guarantee that that's exactly what's going to happen. All right, so moving on to Oregon, where their attorney general has filed a lawsuit against Coinbase and calls XRP an unregistered security. So even though the SEC and Department of Justice or whoever dropped all their crap against XRP, it looks like at the state level, because they can, this may be cranking up again. So Adrian Zemunsky, please tell us more from Cointelegraph. Attorney General Dan Rayfield, the Oregon Attorney General, has filed a lawsuit against Coinbase and arguing that XRP and other digital assets are unregistered securities. Ray Yield sued U.S.-based publicly traded crypto exchange Coinbase for allegedly violating Oregon's securities laws. In an April 18th announcement, the Oregon Department of Justice said the suit was part of an effort to fill what it described as a regulatory vacuum left by federal agencies under the Trump administration. Quote, states must fulfill enforcement vacuum being left by federal regulators who are abandoning these cases under the Trump administration, the department said. Well, let's pause to just see, or just to experience what that really means. Like I said, the SEC itself is dropping almost all of its cases against all the shit coins and all the exchanges, but the states still have the right to do some incredibly massive damage to these companies, these coins. It's not at the level of the federal government, let's be clear, but it's not exactly a walk in the park. So there's going to be more pressure put on these guys because this vacuum that the Oregon AG is talking about is exactly kind of what I was thinking. It's like somebody's going to step up to this plate. I mean, just because Trump is basically backing off of all these guys does not mean Oregon, California, New York isn't going to step in. And I expect even some red states like Texas and Florida to also start stepping in and saying, no, this is bullshit. You can't do this to our citizenry. And that's exactly what's going to happen. Coinbase Chief Legal Officer Paul Grewal voiced his frustration over the lawsuit in an April 21st Twitter post. Justin Slaughter, the Vice President of Regulatory Affairs at crypto investment firm Paradigm, pointed out that the lawsuit claims a long list of digital assets, including Cripple, being unregistered securities. Yarden Noy, partner at crypto legal firm DLT Law, told Cointelegraph that if the court ruled these assets are securities, it would most likely create more confusion in this regard. It would not be a binding precedent in other cases, not even within Oregon, he added. Still, Noy explained that the court decision could be used by regulators and potential plaintiffs to build and make their cases. He said, quote, just like the decision in the Ripple case, which the complaint seems to be ignoring entirely, did not make all tokens immediately listable on U.S. platforms. I don't expect the opposite to happen here, end quote. Paradigm's Vice President of Regulatory Affairs, Justin Slaughter, called the action a kitchen sink lawsuit. The tokens cited include high-profile shitcoins such as Aave, Avalanche, Uniswap, and Near Protocol, as well as the wrapped version of Terra's collapse token W Luna, however, not Luna itself. Quote, Coinbase, through the Coinbase platform and Prime, has made available for trading in Oregon crypto assets that are offered and sold as investment contracts and thus securities. This includes, but is not limited to, the units of each of the crypto securities further described below. Ripple Labs, the firm behind XRP, has already faced a years-long battle with the U.S. Securities and Exchange Commission. Ripple was hit with a lawsuit by the SEC in late 2020, calling XRP a $1.3 billion unregistered securities offering, pausing to say, it was indeed an unregistered securities offering. I don't care what Brad Garlinghouse or whatever those idiots say. It is an unregistered security. I'm sorry, it is. If you hold Ripple or XRP, I would sell it for Bitcoin today. The same lawsuit was dropped in by the SEC in late March, but it did provide little legal certainty for the crypto industry. Oregon's complaint comes amid growing concern among state officials that federal regulators are pulling back from crypto enforcement. This suit appears to be part of a broader trend of state-level authorities stepping in to fill the vacuum. Before Oregon's action, XRP's legal standing was being viewed as increasingly clear. Coinbase, a crypto exchange known for its relatively cautious stance on regulatory matters, added XRP futures to its derivatives trading platform on April the 21st. And the states are going to just have a heyday on XRP and a whole bunch of other shitcoins. I don't know what it's going to take. I remember all the XRP and the Ripple heads basically going, see, told you it wasn't a security. It's a security. There's no doubt about it. It passes the Howey test with flying colors, and that's how you can tell something is a security. I don't know what to tell you. If you're holding any of this other garbage, you've got to start really thinking about how you're going to get rid of it and get rid of it fast. All right, on to the Dutch. Holland, where Dutch bank ING is said to be working on a new stable coin with other TradFi and crypto firms. Ian Allison writing a story that basically is bolstering my position on the flood of stable coins that are to come. This is out of CoinDesk. Dutch bank ING is working on a stable coin, looking to take advantage of Europe's new cryptocurrency regulations that came into force last year, according to two people with knowledge of the plans. ING's stablecoin project could take the form of a consortium effort involving other banks and crypto service providers, both people said. Quote, ING is working on a stablecoin project with a few other banks. It's moving slow as multiple banks need board approval to set up a joint entity, one of the sources said, and ING themselves declined to comment on anything. Europe's markets in crypto assets regime, also known as MiCA, requires stablecoin issuers across EU member countries to hold an authorization license while promoting the potential of euro-denominated stablecoins. The vast majority, however, of stablecoins in circulation are pegged, of course, to the United States dollar and not the piece of trash we all know as the euro. Anyway, MiCA stablecoin rules, which also require issuers to maintain significant reserves in banks based in Europe, have strengthened complaint offerings like Circle's Euro stablecoin over its main rival Tether, according to a note earlier this year from JP Morgan. And banks like ING entering the European stablecoin space means that French lender Société Générale, the first big bank to offer a stablecoin through its SG Forge innovation division, will soon have some competition. Well, that's the end of the article, but all the Euro-pegged stablecoins don't do well. Almost none of them have any traction. And we're going to circle back to this European situation in the second part of the show, because there's some other developments. They're running scared. The European Union is in a frenzy, and they're being attacked almost on all sides. But first, I have some news. I have a discount code for SoapMiner. Me and SoapMiner worked out a deal. He's given me the Bitcoin and coupon code. It's all caps, or you could probably put it in lowercase, but what he gave me was all caps, all one word, Bitcoin and you get 10% off of your total purchase, not a partial purchase. Like if you order soap from SoapMiner because you're dirty and you want to get clean with some nice clean soap, use the coupon code Bitcoin and it's in the little place where you put it. It's in the cart. So you shop on SoapMiner.com. That is SoapMiner.com. And when you select your items, you go to your cart. In the cart, the page that shows what's in your cart, down below your inventory of what you want to purchase, there's a place to put coupon code. If you want 10% off that, type in Bitcoin and all one word, coupon code Bitcoin and all one word, and get yourself some soap like cedarwood tallow soap. Maybe you want peppermint tallow soap. Maybe you want lavender, or even something called pine tar, which is actually a lot cooler than it sounds. Who wants to wash themselves with pine tar? Dude, you got to try this stuff. And if you don't want any of that stuff, just get the rough cut tallow soap. It doesn't have any scent whatsoever. It has 3 ingredients. It's 100% beef tallow, there's lye, and there's distilled water. That's how you make soap. This is the old-fashioned way of making soap. I love this guy's soap. He sent me like 4 bars of soap. It's freaking awesome. And one of those bars was rough cut tallow soap. No, actually, he sent me 5 bars. He sent me every single one of his lineup here. And my entire family loves this stuff. If you want to get some soap, if you want to get clean, if the culture today is making you feel dirty and nasty and smelly, well, then wash yourself off with some of that handmade tallow soap from SoapMiner. Get it at SoapMiner.com. Use Bitcoin and in the coupon code for 10% off of your entire purchase. Now, Paul Atkins has been declared the new SEC chair as Trump reasserts influence over the agency. Watchdog Vince D'Aquino from Decrypt describes more about it. Paul Atkins was officially sworn in as the 34th chairman of the Securities and Exchange Commission on Monday, bringing a crypto-friendly approach that contrasts with his predecessor's aggressive enforcement strategy. Atkins vowed to push the SEC's mission to facilitate capital formation, maintain fair, orderly, and efficient markets, and protect investors. In testimony delivered before his Senate confirmation, Atkins said his time in public service and in the private sector allowed him to see firsthand how regulations, including those of the SEC, affect markets and investors. Exactly 52 Republicans voted for his nomination, while 44 Democrats opposed. Atkins' private sector leadership includes founding Potomac Global Partners in 2009, developing standards for a digital asset industry. Atkins said he'd resign from Potomac within 90 days of confirmation. Last month, Elizabeth Warren wrote to Atkins demanding he clarify Potomac's advisory role in crypto firms, including the now-defunct FTX exchange. Unclear regulation creates uncertainty and inhibits innovation, Atkins told the Senate. He promised to guide the SEC through a rational, coherent, and principled approach. Atkins replaces Gary Gensler, who sued numerous crypto firms during the Biden era for alleged securities violations. Previously acting chair Mark Uyeda and Commissioner Hester Pierce have already moved to dismiss most of these, while also clearing meme coins and crypto mining from securities oversight. Criticizing Biden-era regulations as unclear, overly politicized, complicated, and burdensome, Atkins has signaled a deregulatory approach to the market. Financial disclosures for his candidacy reveal Atkins holds up to $5 million in digital asset investment firm Off the Chain Capital LLC, where he is also a limited partner. Atkins has combined net worth of roughly $327 million, including assets and equities from his heiress wife, making him one of the wealthiest to hold the SEC chair in decades. President Trump's SEC picks beyond Atkins shows a consistent pattern of selecting individuals with strong Wall Street connections and a track record of handling financial industry matters. In his first term, Trump picked Jay Clayton, who served at Sullivan and Cromwell, a prominent law firm with deep ties to Wall Street. At the law firm, Clayton represented top financial firms including Goldman Sachs, Deutsche Bank, Barclays, Bear Stearns, and UBS. I thought Bear Stearns died. Oh, well, that's right. That they were still alive during this time. The Atkins-led SEC now faces decisions on over 70 crypto ETF applications. Wow, that's a lot. With crypto assets ranging from shitcoin number 3 to shitcoin number 12 to, God forbid, Dogecoin and even Melania coin. Quote, oh, it's sick. Gonna be a wild year, Bloomberg senior ETF analyst Balchunas said on X. Yeah, well, the states are gonna backstop a lot of this. That's gonna become more clear than I think anybody really realizes. Everybody thought because the SEC just had basically dove under the covers and said, no, we're not going to do any of this, that everything was over and everything was going to be just peachy. No, it's not going to be just peachy. You just wait. Meanwhile, we're going to run the numbers. CNBC, futures and commodities breaking. About half of Americans have a negative view on Tesla and Elon Musk. CNBC survey finds. I don't care. Oil is up 3 points to $64.92 a barrel. That's West Texas Intermediate, while Brent North Sea is up 2.6 to $67.98. Natural gas sucking swamp water. It's, well, a third of a point to the downside, sitting right at $3 per 1,000 cubic feet. Gasoline up 2.5 to $2.11 per gallon. Gold is getting hit today, probably because it exceeded some serious lines yesterday, making all-time highs like all day yesterday. It's chilling out at $3,392.60 after a point drop. Silver, however, is up 2/3 of a point. Platinum is down 2/3 of a point, while copper is up 2.88% and palladium is up 1/5 of a point. Ag futures are pretty much mixed today. Biggest winner is chocolate again. 4 points to the upside. And the biggest loser today is rough rice. Apparently nobody wants sushi. 2 points to the downside. I got live cattle up 2.25%. Lean hogs up 2.14%. Feeder cattle up almost a point. And everybody on Wall Street is having a good day. It's a good day on Wall Street. Dow is up 2.74%. S&P is up 2.7%. NASDAQ is up 3%. And the S&P Mini is up 2 2/3 of a point. Bitcoin doing well today. $90,770 nails us right at a $1.8 trillion market cap. 26.6 ounces of shiny metal rocks can be had with your one Bitcoin, of which there are 19,854,575.88 of, and average fees per block are slightly elevated at 0.05 BTC, taken in fees on a per block basis. And whoop-de-doo, there is 15 blocks carrying 20,000 unconfirmed transactions waiting to clear at high priority rates of 4 Satoshis per VByte. Low priority is going to get you in at 3. Hash rate continues to drop 840.6 exahashes per second. So we are well off of our all-time highs, yet we're way, 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 way up there. So people that are, probably saying, oh, mining death spiral imminent. Yeah, well, good luck with that. All right. 501 sats from user 427522445 says boostflation. 587 from Psyduck says Psyduck. 2,100 sats from SoapMiner. SoapMiner, my man. He doesn't say anything, though. Come on, Soap. Give me some clean thoughts. 1,021 sats from Axelrod Double Aught says, food for thought. Look at the BTC versus gold and see how BTC is maturing as a store of value similar to gold. Yeah, see, we shouldn't be fighting Peter Schiff, and Peter Schiff shouldn't be fighting us. We should be walking hand in hand. I don't get it. I don't get it. 2,100 sats from Wise Hodl says, your segues into your ad reads have been really good lately. Love it. Sometimes you just start getting good at stuff. And honestly, I love the live ad read. I want to be really good at it. Like it used to be in the olden days when, people actually would spend time, appreciating their vendors. It's not like I'm trying to sell you Black & Decker here. It's not like I'm trying to sell you a Ford F-150. Right? They have their own advertising budgets. You know who doesn't? SoapMiner, Leathermint, Maple Trade. They don't have ad budgets, dude. They don't have that kind of cash. It's up to people like us to look for and locate high quality products that are made by just simple people that just want to, maybe they would rather make soap than doing whatever the hell they do. Maybe they, would rather just do leather stuff all day long instead of having some kind of fiat job and then having to do leather goods. Why not give these guys a leg up? I've gotten some shit. I've gotten some shit for advertising for people. Not by the people I'm advertising for, but man, I want to hear ads. Dude, you might actually want one of these things. And why would you not want to support your fellow pleb? And you can do so at the Circle P because the Circle P is open for business. And 2,500 sats from Christerkovich, I think is how it's pronounced, says, love the content. You got me hooked the first episode when you let's do the numbers. It's a great ag and econ update along with the podcast episode. Yeah, because Bitcoin does not exist in a vacuum. It exists alongside everything else in a macroeconomic environment. And if we don't look at bond prices, if we don't look at what's going on in equity markets, oil, energy, all that, all at the same time, then we don't get a very clear picture of what the hell is going on outside. 500 from Lupin says, oh, looks like poor. Oh, wait, am I beyond? Yes, I am already beyond. Those are all the larger than 500 sat boost. I've still got my helipad boost filter on. I forgot to take it off. I am sorry, guys, if you gave me less than 500 and you didn't get your note read. It's because I forgot to pull the filter off. It's nothing personal. I will try to remember to do that next time here on the Bitcoin Dan podcast, and that's the weather report. Welcome to part 2 of the news that you can use. Bitdeer secures $60 million to boost Bitcoin ASIC production amid record hash rate. Well, hash rate has been dropping, but yeah, we are in very high hash rate times. Amin Hakshanis, I think is how it's pronounced, Cointelegraph. Bitcoin mining firm Bitdeer has secured $60 million in loans to ramp up its Bitcoin ASIC manufacturing efforts as global mining competition intensifies amid record-breaking network hash rates. According to the annual report, Bitdeer entered a loan agreement in April with affiliate firm Matrixport, a crypto financial services company founded by Bitdeer's very own chairman, Jihan Wu. The facility offers up to $200 million, backed by Bitdeer's Seal Miner hardware, with a floating interest rate of 9% plus market benchmarks. As of April the 21st, Bitdeer has drawn $43 million from said credit line. In April of 2025, this statement from Bitdeer, we entered into a loan agreement with Matrix Finance and Technology Holding Company for a financing facility of up to $200 million in loans drawn under the facility bear a viable interest rate equal to 9% plus a market-based reference rate. Each drawdown is repayable in fixed monthly installments over a 24-month term and is secured by a pledge of SealMiner maintained based on a loan-to-value ratio. As of April 21st, 2025, we drew down the $43 million under that facility. Well, private placement of 5.25% convertible senior notes are due 2029. On November 26th in 2024, we issued $400 million US in aggregate principal amount of 5.25% convertible senior notes due 2029 in a private placement to persons reasonably believed to be qualified institutional buyers pursuant to Rule 144A under the Securities Act of 1933, as amended, including $40 million aggregate principal amount of 5.25% convertible notes pursuant to the exercise in full by the initial purchasers in that private placement of their option to purchase additional 5.25% convertible notes. The convertible notes is the MicroStrategy play. You know, we had conjectured when Michael Saylor did that huge webinar for all the CFOs of all these Fortune 500 companies, and that webinar was like packed. It was like a few hundred, and that's a lot. That's a lot of CFOs because each one represents a different company. It was a lot of money in that webinar, right? We weren't really thinking about convertible notes because nobody had really peeled into what was in that webinar, except, a couple of people did, but it didn't really get out. We were just thinking that he was telling him, hey, buy Bitcoin. But what was really going on behind the scenes is he was saying, here's how we're constructing our debt instrumentation, here's how we're selling it, and here's what we're doing with the proceeds. But it was really the construction of the debt instrumentation that clearly was the great guts and feathers of Strategy's webinar to all these CFOs, and now it looks like it's taken hold. Continuing, the latest funding adds to a $17 million unsecured loan obtained in January alongside previous capital raises totaling $572.5 million via, you guessed it, convertible notes in 2024. Bitdeer also issued over 6 million shares, raising nearly $119 million in equity markets this year. Dude, these people are just vacuuming up funds. They're just building debt instrumentation like a frickin' Dyson vacuum. It's amazing. But in February of 2025, Bitdeer acquired a fully licensed 101 megawatt gas-fired power project near Fox Creek, Alberta for $21.7 million in cash. The site, with potential to scale up to 1 gigawatt, 121 gigawatts, includes all necessary permits for construction and a 99 megawatt grid connection. The power plant is set to be developed with an EPC partner and is expected to be operational by the fourth quarter of 2026. In March, the company also purchased 40 megawatts worth of liquid-cooled mining containers from Sci-Heat. And more recently, it was reported that Bitdeer is expanding its self-mining operations and investing in United States-based production. The shift came in response to cooling demand on its mining hardware from other miners. Quote, "Our plan going forward is to prioritize our own self-mining," said Jeff LaBerge, Bitdeer's head of capital markets. Additionally, on February 28, 2025, Bitdeer launched a $20 million share repurchase program, so they're buying their shares back, effective through February 2026. And to date, it has repurchased well over 1 million Class A shares, valued at about $12 million under the program. Bitdeer's expansion comes as Bitcoin's network compute power hit a record 1 sextillion hashes per second in early April, according to BitInfo charts. A higher hash rate indicates that more miners or more powerful machines are competing to solve Bitcoin blocks, and as competition rises, each individual miner's chance of earning block rewards decreases, implying declining profitability. Further hurting miner revenue are low transaction fees. As of now, the average Bitcoin transaction fees hovers at around $1, down from over $16 per transfer in April just last year, according to YCharts. The low transaction fees and rising hash rate forced public miners to sell over 40% of their BTC production in March, the highest since late 2024. And firms like Hive, Bitfarms, and Ionic Digital reportedly sold more than 100% of their monthly output of BTC. Now, where else have we heard about Bitdeer? I'm going to find out. I'm going to use my handy dandy search tool on Obsidian, which I keep all of my transcripts from all of the shows that I've done since I started using Obsidian. And I'm just going to type in Bitdeer and see what happens. Let's see. Okay, I've been talking about them in Obsidian since at least episode 718. And I've got a point to this. Trust me, I've got a point. Tether buying Bitdeer's dip. Remember that? That was episode 1077 of Bitcoin And. So let's see here. I'm going to get into this. Let's see. If anybody remembers Butterfly Light, I'm going to say anyway. Yeah, Bitcoin miners, as Bitcoin mining companies slump, Tether loads up on Bitdeer. All right. So if you remember that story, they were purchasing Tether is betting big on one of the sector's largest players, purchasing $32 million worth of equity in publicly traded Bitdeer in April. And here we have Bitdeer going whole hog on getting into facilities. A gigawatt, 40 megawatts here, $200 million of senior notes there at 9%, plus market benchmarks over there, and $43 million in the $200 million credit line. These people are freaking on fire. And Tether is knee deep into this company. And Tether's knee deep into agriculture in Central and South America. Tether is the 7th largest buyer of United States Treasury bonds. They rival whole groups of countries collectively. They buy more bonds than Canada and Mexico. And we are not watching this company closely enough. I'm telling you, and I used to tell you, and I still do, if you're watching Western Europe and the United States as your benchmark for who's buying Bitcoin and when shit's going to pop, that ain't it. It's Central America, South America, Africa, right? Eastern Europe, Southeast Asia, Balkans and the Baltics. These are the places, maybe even Australia, but I consider them Western, part of the Western culture. And we have, basically we're blinded by our own hubris and our financial prowess and our instrumentation of being able to spread debt everywhere that we want to. And here we have Tether, who is going to be the United States tool of choice to keep the dollar alive just long enough for Trump and the rest of all the people in Washington that hate the EU. And if you don't think that we hate the EU, you're not reading the right news stories. Victoria Nuland herself on a phone conversation said, fuck the EU when it came to Ukraine. She didn't care if they came into the negotiations. She didn't care at all. She was our, I don't know, what was it? Was Secretary of State for a while. This is like Victoria Nuland in the United States is one of the heaviest hitters ever. You had the way that we were doing our interest rates, especially kind of coming out of COVID, we were really screwing up Europe's bond markets to the point that they damn near collapsed. That we are being hostile to the EU, or, well, not to Europe, but to the European Union, the structure, the umbrella structure under which all of these European unions that have collectivized into this EU thing, we are actively attacking this thing. And we have been for at least 5 years, possibly longer. And we'll get into that here in a second. But first, I want to talk about China. Because China's M2 money supply has hit a record high, and this might explain why we're seeing a little pop in Bitcoin. By the way, this is written by Alex Larry from BitcoinNews.com. Bitcoin may be about to take off as China's money supply just hit an all-time high. In the past few weeks, China's M2 money supply, which includes cash, savings, and liquid deposits, has reached 326 trillion won, or 44.7 trillion United States dollars. If that didn't make your eye water, it was probably because you were distracted by the hot blonde crossing the street and you were watching her. So I'll say it again. China's M2 money supply is at $44.7 trillion US. This is getting global attention, especially from Bitcoin analysts who think it will push the scarce digital asset to the much-awaited $90,000 price, which we did hit earlier today. Quote, China's M2 money supply just hit 326 trillion won. The money printers are back on. Risk assets are about to go parabolic, says analyst Kong Trading. M2 money supply is an economic indicator used to track how much liquid money is in the system. When M2 goes up, it means the government is printing more money and it's easier for people and businesses to spend and, more importantly, borrow and invest. Here's how that sentence should actually read. When M2 goes up, it means the government is printing more money and it's easier for people and businesses to borrow so that they can invest and spend. It's about the borrowing. It's not about the spending, and it's not about the investing. Well, it is about the investing, but you've got to have money to invest with. And how do you get that money? You borrow it, but you wait until interest rates go down. Right? And when interest rates go down in this environment, they're printing money. They're printing lots of money. And those monies are being used to prop up what? The world stock markets. Why do you think we have valuations this freaking high? And I'm talking about the Dow at 39,000 points. And it used to be 42,000, but Trump destroyed it with his tariffs. Yeah, that didn't help anything, but you're still talking about like local all-time highs of a stock market. You got stock valuations with price to earnings valuations that are like 80 to 1. It's like you just spend 80 times to buy one share of a company to give you, like, if you spend $80 on a share, it has an 80 to 1 valuation. You are going to get $1 back that year if that stock has any kind of dividend at all. And that's just a very simplistic view. When my father was giving me advice about, investing, and this is like back in the 80s, he wouldn't touch anything over 6 to 8 price to earnings ratio. And now I've seen 40s, 60s as common events. What do you think's driving that? It's cheap money entering the market. People borrow it and they use it to throw in the stock market. Stock market goes up and all the politicians can say, look, we're awesome. Why? And people buy that. They say, yes, you're awesome. We want to vote you in again. So what do? It's all bullshit. That's why I buy Bitcoin. Anyway, quote, if China's M2 money keeps growing, it could give Bitcoin a push upwards based on what we've seen before, said Emmanuel Cardozo de Armas, market analyst at Bricken. As of mid-April 2025, Bitcoin is trading at around $88,000, up from lows of $75,000 earlier this month, and we're watching to see if it can break through the $90,000 resistance level. Well, let's see what it's doing right now. And I'm going to go over here to TradingView, and we are at $90,751, and we broke through $91,496. The high on this daily candle so far was $91,496. So, yeah, we broke all the way through it, ladies and gentlemen. So, let's see, where are we at here? Bitcoin is doing well, even as global markets are dealing with the challenges like U.S. and China trade tensions and uncertain Fed policy. Fed Chair Jerome Powell just said interest rates will not be cut in the near future, and investors are on edge. But Bitcoin is holding steady and even outperforming U.S. equities in the past few months. It's not just China. Global M2 money supply, that's the global M2. We're way beyond China's M2. We're talking about global M2, the liquid cash floating around the world. That money supply has been growing, up by $4.5 trillion US just this year. European Central Bank has cut their interest rates several times, and that's adding to the global quantitative easing. This extra liquidity globally is making investors more comfortable with risk assets like Bitcoin, as traditional inflation hedges like gold are also doing well. Analysts say Bitcoin often follows gold's performance, but with a delay of several months. The analyst Cryptolika thinks Bitcoin will hit $155,000 in the midterm following gold's lead. Even with optimism around Bitcoin and rising liquidity, experts warn that there are still risks. The U.S.-China trade war is heating up again, and Trump's 90-day tariff pause nears its end. That could cause market volatility and delay Bitcoin's rise to 90K. Well, we're punched through it, but we've got to close that candle for today. Otherwise, all bets are off. Regulatory uncertainty, especially in the U.S., is still weighing on investor sentiment. China is also reportedly looking to liquidate seized Bitcoin through private firms, which adds more complexity to the market. Yeah, they're selling their Bitcoin to buy gold, but let me finish this first, and then I'll get back to that. Despite the headwinds, institutional interest in Bitcoin is strong. Bitcoin ETFs in the U.S. saw $100 million in inflows recently, which means big investors are still bullish. Let's get back to China. Reportedly liquidating their seized Bitcoin. I told you about this shit like last week or the week before, and it's not the Chinese government, and they're not doing it through private equity firms. It's regions in China, cities it's not the Chinese government. It's all these cities that have basically at a regional, in a very regional, a very local way, has seized Bitcoin, but they're not giving it to the Chinese government. Right? I get the feeling that that's a cultural thing, that the federal government of the United States would definitely confiscate that shit. Right? But in China, it doesn't seem to be that way. So who's selling it is the regions in China, as far as I can tell. That's what we went into either last week or the week before. It's not the Chinese government. It's not their federal government, their unified communist Chinese party, right? It's all these little regions are selling what they've confiscated from, I don't know, whoever they confiscated it from, right? Maybe it was like illegal mining activities or drug dealers. I don't know. I don't care. But everybody that I've seen several news reports saying it's the Chinese communist government that is selling 15,000 Bitcoin. It's not that way. It's not working that way. It's these regions that are doing it. Now, it might have the same effect, but what's being overblown here is that the news and the media are saying that it is the Chinese government. Guys, it's not. It's Chinese regions. They're making decisions on their own. All right. Buzzbot.net. Yeah, you're pissed. If you're on Nostr, you're pissed at Buzzbot. I'm not. I think it's fun. I don't care what anybody says. Oh, it's spamming. First of all, it's completely destroyed like the sidebar on Primal if you're using like a web browser. The right-hand sidebar on Primal is the trending. Right? And it's always the same people in the trending. It's always Matt Odell. I love Matt Odell. Don't get me wrong. It's always Marty Bent. I love him too. It's always Gigi. It's always Svetsky. It's always the same names. It's been that way for like a year and a half, ever since Primal put the trending tab on the right-hand side of the Primal page. It's always the same. And now it's not, because anybody can buy influence. And I know what you're saying. God, freaking influencers. I probably just misspoke. Look, guys, take it easy on the Buzzbot guys. There have been at least 2 separate attempts on Nostr to where you could pay to have people see your posts. And neither one of them worked because they just didn't work all that well. But Buzzbot seems to be freaking killing it. If you're not really understanding what Buzzbot is, or for whatever reason you haven't seen one of these things yet, Buzzbot is a Nostr native bot that lets you attach Bitcoin bounties to your posts and reward engagement auto-magically. Guys, yes, can this be like abused? You damn Skippy, it can be abused. Whatever. Get over it. And by the way, the Buzzbot will probably die down a little bit, right? People, like I've used Buzzbot all of 2 times. Just to figure out how it works and what the mechanism is. And it's honestly, it's like, it works. This shit like gives, but I mean, the engagement is, there's no real engagement, right? So what they're doing is they're saying, look, if you pay, if you say at Buzzbot space, and then however many Satoshis you want to spend on getting engagement, that's where you put it. So I'll put I don't know, I think I said orange cats are the best cats, at Buzzbot space 500. Just 500 sats. That particular post probably outperformed all of my other Nostr posts. But do you know what most of the engagement was? It was just thumbs up, or somebody liking, or somebody just simply reposting. Because that Buzzbot gives you those 3 options. Because it will say, hey, somebody who liked this post randomly will get X amount of sats. Somebody who randomly or somebody who posted this will pick a random winner of somebody who reposted. Somebody who did something else will randomly be chosen to be a winner, and Buzzbot keeps like 10% of whatever this thing was. Whatever the bounty was. If I put in 500, they charged me 550 Satoshis. Right? But it worked. I understand the abuse. And I understand that people are concerned that it's just going to clog up the thing. Have you ever been tagged in the Maria's or the Marie's hell thread? Then you do not know hell. Buzzbot is not causing the hell that you think it's causing. Not by a long shot. The Marie, she causes hell, and I love her for it. We're all experiencing this thing together, this thing called Nostr. So do me a favor. Give Buzzbot a try. You can go to buzzbot.net on the web to read a little bit more about it. It's honestly, it's a lot of fun. Just give it a shot. Stop bitching about it, okay? It's not that big of a deal, because we've got much larger fish to fry at the European Central Bank. This is what I want to end the show on. I've got two here, right? And they go together. This is from Atlas 21, European Central Bank. Quote, the digital euro could replace $256 billion or billion euros in cash and deposits. All right. According to the latest ECB report, the digital euro could replace a significant share of physical cash and traditional bank deposits, as reported by EFE. The central institution estimates that for every 10 euros issued in digital form, 5 euros in physical banknotes could be withdrawn from circulation. This is how they do it. While 3 euros might migrate from conventional bank deposits. This transformation would depend on adoption rates among the public. Frankfurt's projections outline 3 different scenarios. In the most conservative case, with minimal adoption, about 15 billion euros in cash could be replaced. Pausing to remind you that if you've never listened to Alex Jones rant about a problem, one of his major issues is taking hard cash out of the hands of citizenry. And he was always saying, it's happening right now. You got to keep cash alive. Well, Europe has discovered cryptocurrency and they think they're going to win. They're not. But cash is going to be replaced no matter what the hell we do. Okay, just hold on to your horses here. The medium adoption scenario suggests 125 billion euro, while the most optimistic forecast points to 256 billion euro in physical currency being phased out. Last January, ECB board member Piero Cipriani emphasized the strategic importance of the digital currency, presenting it as a countermeasure to the growing influence of, wait for it, dollar-based stablecoins inside the European financial ecosystem. Despite the ECB's stated goal, the actual need for a digital euro remains uncertain. This uncertainty is reflected in the lukewarm interest shown by European citizens. An ECB study revealed a strong preference for traditional payment methods and widespread indifference towards the digital euro. Out of a sample of 19,000 people across 11 European countries, only a small portion hypothetically allocated funds to the digital euro, favoring instead cash and conventional bank accounts. All right, so before we get into the next one, let's kind of look at this. The European Central Bank wants to be the people's bank of all European countries. You would have an account with the European Central Bank. Well, what does that mean for the rest of the banks of Europe? You're not needed. You're not needed. And that's a bad thing, by the way. Yes, we can all hate banks for as long as we want, but it's worse to have one single bank. And your cash is digital, held by that bank that is highly politically influenced, which means that you can have your shit shut down if you make a wrong tweet, if you make a wrong Facebook post, if you were caught on camera at a protest. You see where this goes? That's why they want the cash out of your hands. They want to just be able to tell you what you can get, when you can get it, how you can get it, where you can get it, and if you piss them off, you don't get shit. Well, pretty sure stablecoins have something to say about that. But let's get back into why are they talking about this? Why is the ECB so interested in a digital euro? And why? Because they had been talking about this and then it just kind of died down. But now the rhetoric is insane coming out of Europe and the need for a digital euro. Why? Well, European Central Bank fears a contagion risk from Trump's crypto embrace, and MiCA rules may not be strong enough, according to Politico, and this is written by Adam James from The Block. The European Central Bank believes United States President Donald Trump's support for the new cryptocurrency industry may cause financial contagion, a word frequently used amid last cycle's fallout from collapsed crypto exchange FTX, failed CeFi crypto lending platform BlockFi, and collapsed DeFi project Terra Luna, putting the European economy at risk, according to a policy paper seen and reported on by Politico. The European Commission, however, has reportedly pushed back on the ECB's analysis of the situation across the Atlantic, highlighting an ongoing debate on the continent over the Trump administration's embrace of the relatively new sector to strengthen the dollar's reach. And promote asset inflows into the United States, specifically via, wait for it, stablecoins. The arguments in Europe follow 2023's Market and Crypto Asset Regulation, or MiCA, which has widely been considered the first significant legislation designed around cryptocurrency firms. Among other things, MiCA limits the issuance of foreign currency-backed stablecoins. Two newly drafted laws in the United States meant largely to extend the reach of dollar-backed stablecoins called Stable and Genius. Those are not the stablecoins. The Stable Act and the Genius Act is what they're talking about, are unsettling the European Central Bank, which fears MiCA may not be strong enough to combat their effects. I think Europe, the European Central Bank and the European Union are waking up to what is about to befall them. One EU official has claimed, according to Politico, that the ECB has been overplaying the threat of stablecoins to garner political support for its controversial digital euro project. However, the ECB argues that should European Union issuers be forced to redeem foreign-held tokens alongside European ones, there could be a, quote, run on their reserves. I'm going to try my best to make this black and white, and I'm going to try rereading this one sentence. One EU official has claimed that the ECB has been overplaying the threat of stablecoins to garner political support for its controversial digital euro project. That EU official is 100% wrong. Fully wrong. Cannot be more wrong. The ECB has been overplaying the threat of stablecoins not to garner political support for its controversial digital euro project, but because they know that stablecoins are going to run over them like a team of horses carrying a wagon loaded with cow manure. They are terrified of the stablecoin because the European Union and the European Central Bank, they understand what is about to happen to them. MiCA is not strong enough. It had no chance. And when MiCA was coming out, there was a lot of people. We were very concerned about what MiCA meant. But here's what we didn't see. Even though it has been around for years, Tether, the company, we did not see that they were not just some, zombie walking around in the forest and I got these stable coins and you can use them and blah, blah, blah. And blah, blah. No, we had no idea that the potential that laid within the Tether stablecoin itself was going to scare the ever-loving hosiery off of Fifi Lagarde. I'm talking about Christine Lagarde, the president or the head of the European Central Bank, the French federal felon, because she was convicted in France, but, she didn't serve any time. And while she was being convicted in France, she was on a plane going to New York to have a party thrown in her favor at the United Nations because she was going to become the head of the European Central Bank. And she is scared shitless. And she's been scared shitless of this for the entirety of probably the entire lifespan of Tether, because she was smart enough to understand what it actually meant. And it has grown up to the point that it is well beyond a threat to the European Union. The United States has been trying to kill the European Union for years. It's not good for anybody. It's not good for Europe. It's not good for the United States either. right? And there could be an entire show about just this, and I'm not going to do that here. I'm running out of time. I got to get prepped for a phone call. I'm just telling you, the new rhetoric, the newly ignited rhetoric for the creation and circulation of the European Central Bank's digital euro is because they are absolutely terrified that they are going to be saddled with United States debt as stablecoin in the form of Tether floods their economy. Because Tether is going to buy probably every single shred of debt that the United States can print in the form of treasury bonds, and they're going to convert those into stablecoins, essentially monetizing in a privatized way United States debt. What does it mean to monetize debt? It means basically create money out of thin air. Tether's going to buy debt printed by the United States Treasury, and then they're going to monetize it by creating stablecoin called Tether for it. They're going to export that everywhere because the West is still not going to embrace Tether the way that Europe is, the way that Latin America is, the way that Africa is, the way that Southeast Asia is. It's almost as if our own ignorance of Bitcoin in the West, or at least in the United States, is going to have an insulary effect. And we're going to be able to print as much money as we want. We're going to convert it into Tether, and we're going to flood European markets and the rest of the world with that monetized debt. And it's going to work. That's the whole point. There's a lot of people, oh, it'll never work. Oh, bullshit. It's going to work beautifully. In fact, this, in my opinion, is an organic culmination of separate events that nobody could have foresawn, nobody could have engineered. This is 100% organic, and it's going to cause the wholesale destruction of economies around the world. Does that mean that it's good? Not in the short term. That's for goddamn sure. But medium to long term, I don't know. Maybe. We need to get out of this system of fiat. I mean, and you'll go, well, but Tether's fiat. Yeah, goddamn right it is, because U.S. Treasury bonds are fiat. That's the real money. Don't let anybody fool you, man. It's the U.S. Treasury bond. That's the real money. And we're going to flood the world with it. But it's not going to look like a United States Treasury bond. It's going to look like Tether. And Christine Lagarde has no weaponry left to combat it. They're caught flat-footed. The whole world is going to be caught flat-footed. But watching European Union heads of state and heads of finance and heads of industry not seeing this until it was too damn late is kind of delicious. I'll let you ruminate on that, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.